Hello and welcome to an academy. The government of India has made changes to taxes applicable to your investments in the market, which have come into force starting 1st April 2026. Let's decode the most important changes. Before I start, here is a very important announcement. Right now, the Unacademy IAS courses are available at a discounted price of 22,999. Use the code IAS English to avail an extension of up to 6 months free of cost. Those interested in enrolling, do check out the details by clicking on the link provided in the description below. Let's begin decoding the most important changes in the taxation treatment of your investments, which have come into force from 1st April 2026. The first one, securities transaction tax. The government of India, as well as the Securities Exchange Board of India, is worried that too many retail investors are taking too much of a risk by participating in speculative transactions in the derivatives market. And when I say derivatives market, I'm talking about the futures and options market. There is too much of a speculation in this market, but more importantly, which is a concerning factor, lot of retail investors are participating in this market, speculating, taking lot of bets in this market, and at the end of the day, they are ending up losing a huge amount of money. The government of India, in order to increase the cost associated with conducting these particular transactions, has increased the securities transaction tax. In case of the futures, the securities transaction tax has been increased to 0.05%, which was 0.02%. Now, before I go on to the second one, a lot of you will look at the percentages and you feel the change or the hike that has been done by the government of India is very negligible. You will be laughing at these particular changes. But mind you, in the futures and options market, lakhs and lakhs of crores of rupees are invested. Even if there is a slight increase in terms of percentage of tax that is applicable, the actual translation in terms of the absolute change in the taxes paid by the investors will be very high. Right? So, one, the STT on the futures has been increased. Second, STT on the options premium, that is the price that you basically pay to get an options contract. It has been hiked from 0.1% to 0.15%. And the third one, STT on the options, when you exercise these options, this option exercising contract, it will attract now a higher STT from 0.125% to 0.15%. What is the implication of this? The government of India on one side will be able to collect more amount of taxes. But at the same point of time, the taxation burden on the investors will be higher. The government of India wants to reduce speculative transactions in the market by increasing the cost associated with the conducting these transactions. Second important change is in the context of share buybacks. Until now, whenever the share buybacks were conducted by the companies, the earnings that were done by the investors or the shareholders were treated as a dividend income and were taxed accordingly. But the concern was a lot of the investors, they would have not made a huge amount of earnings. But because the dividend tax rate or the tax rate applicable on the dividend income was higher, their earnings would be lower and the taxes that they would end up paying would be very high. The government of India now has made a change in terms of tax treatment when there is a share buyback by the company. It will now be treated as a capital gains rather than being treated as a dividend. It will now be treated as a capital gains, and accordingly, if you are making a capital gains which is short term and long term, the different tax rates are applicable. If you are making a short term capital gains, then the tax rate applicable will be 20%, and the long term capital gains tax rate will be 12.5%. And this makes more sense for a simple reason. Now, because you're calculating the taxes on the gains, The investors or the shareholder who has sold the shares to the company is paying the taxes only on the gains rather than the complete amount of the earnings that they've done. Right? So, this is one more very important change that the government of India has brought in from force starting yesterday. Third one, sovereign gold bond. Very important change in terms of tax treatment in case of SGB. Until now, the government of India basically took the position that you invest in the sovereign gold bond, you make certain capital gains, the government will not be collecting any taxes on these capital gains. Whatever gains you make will be exempted. But from this particular financial year, the tax treatment in case of the sovereign gold bond has been changed. If you purchase the sovereign gold bond from the primary market, from the primary market, hold on to the sovereign gold bond till they mature. The maturity period for the SGB is 8 years. And you make capital gains in this transaction. Only in such cases, the capital gains tax will not be applicable. No capital gains tax shall be collected by the government. Now imagine you have made capital gains through any other way. You bought these particular bonds from the secondary market. You bought it from somebody else. You held it till maturity or you sold it after a certain time period. So understand the logic here. You can conduct these transactions involving the sovereign gold bonds in different ways. But the exemption shall be provided on the taxes on the capital gains in such cases only and only when you purchase the bond from the primary market, hold it till the maturity period. Any other cases of capital gains, the government will impose capital gains tax and will collect money from the investor. So, what kind of tax rate has been announced by the government? In case of short term capital gains, your gains will be counted as a part of your income, and whatever is the income tax that is applicable according to the slab in which you fall, the tax rate that tax rate will be imposed. That is, that will be counted as a part of your income, and the slab rate is applicable. And if it is a long term capital gains, in such cases, no indexation benefit will be provided, and the government will impose a long term capital gains tax of 12.5%. And another very important point, because I know a lot of investors are interested because the gold prices tend to keep on increasing, especially in the last 2.5 years. It has experienced a very huge spike in the market prices. And with the higher volatility in the market, the prices in a long term, again, I'm talking about the long term, tend to keep on rising. But make a note of this as well. When you invest in a sovereign gold bond, the government will pay certain interest to you. This particular interest is also taxable, right? So these are certain very important principles or important changes in terms of taxes applicable on the sovereign gold bond investment. Another one, interest deduction on dividends. What is the logic here? What is the important point here? Let's say you are involved in marginal trading facility. You are involved in taking loans against securities. What is the transaction here? You basically take a loan from a bank, you invest that in the market, and let's say you earn dividend. On this investment, you earn dividend. Now, when you take a loan from a bank, you'll have to pay interest to the bank. Until now, the government of India basically gave you certain deduction. That is, the interest that you pay to the bank in such cases, you can claim it as a deduction when you're paying the taxes on the dividends. You can claim it as a deduction. The government of India now has made a change in the policy. You take a loan from a bank, you pay interest, and you're involved in these kind of, let's say, strategies. This interest that you pay is no more, I repeat, no more allowed to be used as a deduction. This is one more very important change that the government of India has brought into force from 1st April 2020. There you go. These are the most important changes that the government of India has done under the taxation policies, which will have an impact on your investments as well as the earnings in the current financial year. What are your thoughts regarding these particular changes? Do let me know in the comment section of the video. If you have liked the session, do not forget to hit the like button. If you are yet to join our YouTube channel, kindly do it right now. Thank you. Have a great day.